You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. If you trade options, you've got to ask yourself, why would you choose an options trading platform that puts investors first? At public.com, there are no commissions or per contract fees. And more importantly, it's the only platform where you can earn a rebate on every single contract traded. That means you can save on your options trading costs and keep more of your capital in play. Whenever you trade options on Public, your savings are automatically applied. So, don't change your strategy, change your platform, and see the difference in your bottom line. No commissions, no per contract fees, and it's the only options trading platform where you can earn a rebate on every contract traded. To learn more, please visit public.com/optionsbootcamp. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. It is time to kick off another Education Wednesday here. It is time for Options Boot Camp. I will be your host, your guide. My name, of course, Mark Longo from theoptionsinsider.com. Hope you were able to join us for the big election night spectacular last night on the network. Man, it was a good time. I'm amazed I have any voice left. Went for nearly 4 hours. It was a fun time. I was joined by Mr. P from this show, as well as a plethora of special guests coming on pretty much every half an hour for hours there on the network. So it was a good time there, listeners. If you want to get a bevy of viewpoints on the election and the impact on the markets. We didn't get into any partisan politics. Don't worry about that. So however you're feeling today after the election, if you're yay or if you're nay, whatever the case may be, we don't get into any of that. We really kind of help try to talk you off the ledge, talk about specifics, actionable things, historical perspectives, have a little bit of fun, walk you off the ledge, had a little bit of fun trivia. Dan's mom really loved the trivia. A whole bunch more. So that's another reason you should be checking out the full network. It's already up there on the full network, listeners. The full election night spectacular. It's a fun time. We were going to break it up into multiple parts because it's multiple hours, but truthfully, by the time we finished, we were just so tired. I didn't have the heart to make our editors say, hey, break it up into 3 or 4 shows. So it's all one big spicy meatball. So maybe take it in chunks, but it's a fun time out there, listeners. So if you want a nonpartisan look at the election and the markets, make sure you check it out. And of course, if you want to check out more fun stuff, head on over to the Pro. Theoptionsinsider.com/pro is the place to go to learn more. And you know what? I'm going to be nice here too, because I like the OBC audience. Don't tell anybody here, but we had a special promo at the end of the live stream last night. For those of you who stayed till the end, we gave you $150 in your back pocket. Kind of nice of us because we like you. We said, hey, a lot of you like to kick the tires on the Pro, but for whatever reason, maybe you're not able to swing it right now. We get it. We don't want to add to people's hardship. So we thought, in the spirit of unity and camaraderie and fun, we wanted to reward everyone who listened to the full live stream last night. They got 3 months free of the Pro, $150 in their back pocket. I'm a generous guy. What can I say? So I said, you know what? Let's keep the spirit of unity going here, and let's do it on OBC as well. So if you're listening to this right now, I know some of you skipped the intro, in which case you lose. Right now, if you go to theoptionsinsider.com/pro and type in TryPro3, all one word, that is the code, TRYPRO3, you're going to get $150. You're going to get 3 free months of the Pro. That's a lot. That means you get all the shows we've ever done, access to all of them, the exclusive podcast feed. You get, of course, 3 tilts at our giveaways every month. So 3 in a row you're going to get. So those Pro trading crates, they're pretty awesome. Bespoke stuff, one-of-a-kind things we give away. Those are awesome. You want to win one of those, trust me. You get 3 chances to win those, of course. And a whole bunch more. We put other cool stuff out there early for the Pro, and they get exclusive stuff. So theoptionsinsider.com/pro, you're going to get Pro Q&As, and you're going to get options oddities and all kinds of other fun stuff. So check that out. I don't know how long our producers are going to keep that code live. So if you want to do it, you're listening to this now, get at it. If you're listening to this months or years down the road, you're probably SOL. Maybe knows. If you're listening 4 years from now, maybe we'll have another election night special out there. So yeah, interesting stuff. Make sure you check that out. TryPro3 is the code you should be using. And while you're not typing that code, you can type over MTM, where you can check out my buddy who's also recovering from the election night spectacular. Mr. Dan, welcome back to the show, sir. Have you recovered from the madness of last night, sir?
I've recovered, got a night's rest, and ready to have at it again, Mark.
Yeah, in that spirit of having at it again, I think we will do that today, listeners, with a little bit of the old options drills.
Colin Boots. Time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
All right, everybody, welcome to Options Drill. It's going to be a little bit different one this episode. As you might imagine, we are kind of in some rarefied territory here, post-election, and it seems like a good opportunity to kind of look back and explore some of the outcomes and maybe some lessons we could take away from this election to improve your own trading, or at the very least, mitigate some adverse outcomes. Speaking of adverse outcomes, looks like Dan out there, if you're on the Harris side, it seems like the official nail is in the coffin. Looks like she just conceded a little while ago, so it seems like it is officially done, Dan. So at least the one outcome we were all dreading, Dan, that this would linger for weeks, if not months, and we wouldn't know the outcome, and it'd be tied up into legal battles all the way through January 6th, God forbid. No repeat of that. At least that didn't happen, Dan. So we have that to look forward to.
Yeah, that was definitely a concern of a lot of people, including me, and I'm definitely very grateful for that.
Yeah, listeners, so however you fall on this thing, whether you're happy or sad today, we're not going to get into any of that stuff. We're really just going to talk about kind of some specifics that you can take away from this election and things you probably should learn. Dan, the first thing, I can't say I learned this time. I learned this many years ago, but it was just reinforced to me very starkly this cycle was, and listeners, if you take nothing away from this episode other than this, take this away. You cannot trust polling data in any way, shape, or form going into a big presidential election. They just literally don't know. I don't know about you, Dan. The first time I had this really starkly brought home to me was back in the 2004 election. It was Kerry versus Bush. And the exit polling, I'm not sure if you recall from that day, the exit polling, this is back when they used to release the exit polling early before the polls closed. All of the exit polling was predominantly just demonstrably in favor of Kerry. It seemed like Kerry was going to win in a landslide. I, of course, vote in Chicago. I went out to the voting places, and a very Democratic-leaning town, I think it's fair to say, like most big cities are. There were huge lines everywhere to vote. it seemed like there was going to be this massive outpouring of support for Kerry. And certainly in the early blush, I remember Ted Kennedy was still alive. He was a representative of the Kerry campaign. Him making the rounds on the early talk shows and all the political channels and news channels on election day, early on election day, just making the rounds, gloating. I remember one of the anchors on CNN, I think it was, had to even tell him, Senator Kennedy, it isn't over yet. You haven't won yet. Had to kind of walk him back from his victory lap. And we all know how that played out, Dan. Kerry did not win. Spoiler alert from an election from 20 years ago. But Kerry was not our president out there. So that was a kind of stark reminder to me that even exit polls on the day of the election, listeners, so when they're asking people as they're literally exiting the poll, who did you vote for? People either lie or their methodology is confused. Whatever the case may be, you cannot trust those results. And so, Dan, when I was hearing people on my own network 2 months ago, when we started seeing some early polling data coming out that showed that it seemed like Harris had a small but decent lead in national polls and in different areas, people were coming on this network. I think Dr. Vix even said something like, I think we can kind of price in her winning. We can kind of move on. I cautioned everyone several months ago that we really just do not know. You cannot take anything for granted 2 months out, let alone on the day of. I'm looking here. I had a bunch of polling data I was going to include on the show last night, Dan. I just didn't because I have no faith in any of it. Like I was looking at the numbers. This is the up to the minute national average of national polls. This is an average from, Gallup and a bunch of other national polls. They showed Harris winning by close to 2 points in an average of all national polls. Now, of course, all this stuff is within the margin of error, so another reason why you shouldn't trust it. But still, that was clearly demonstrably false. There was also a lot of uptick there on, the final slate of polls out of the New York Times and Siena College. Some people might argue with those venues or not, but those are widely regarded institutions out there. They showed Harris had leads in enough states definitely to win the Electoral College. They said she was ahead in Nevada, which she did not win, North Carolina, which she did not win, Wisconsin, which I don't believe she won, and Georgia, which she definitely did not win. So all of these polls were demonstrably wrong. Yet again, they're saying her path was easily to 274 electoral votes. All of that was wrong. A last-minute poll in Iowa was breaking, huge poll, Des Moines Register. You think they would know their own state? It's the big publication in their own state. Showed Harris was up by 3% in Iowa. They were going to break the red spine of the country there. It was going to go blue for the first time in a long time. That didn't happen. Spoiler alert, listeners. So even this very late-breaking poll data, listeners, was all wrong. Now, they mentioned in that poll for Des Moines as well, I should be fair to them, they said 3%, but their margin of error is 3.5%, which is a huge margin of error. So again, a number that they should never even put out there because obviously it was nonsense. And it was also well within their margin of error, yet they trumpeted it everywhere. So if you were trading, a lot of people did. We saw early quote unquote relief rallies in the market. A lot of people based on the fact that they thought this was over early and they could kind of move on to other things. And so just take caution. Be careful, listeners, to believe these polls. Dan, what are your thoughts on, even still to this day, we just cannot get the polling thing right, sir? The information is just wrong.
I would love to have this discussion with somebody who actually does the polls, because they could fill in some gaps in my understanding of it. But, I'll play, I won't say play devil's advocate, but I do want to bring up one point that I think is important. And that is just the nature of statistics. Like I'm looking at that, this graphic that we have in the notes here, the national polls, and it had at this point, what was this, November 1st or something?
Well, that was November 5th.
On November 5th. Oh, so that was just yesterday?
Yeah.
Is this from yesterday?
Yes, that's all last minute data, sir.
Oh my gosh. So it had Harris at 48% to win, Trump at 46.8% to win. But wait, does it list the margin of error?
That one does not. No, it probably was outside of that band. It probably was outside of 1.5%. But
yeah. And like when statisticians factor in a margin for error, like they're not just being like, I don't know, give or take a couple. No, it's like mathematical, and like that margin of error matters. And so, like, if the projected win is not outside the margin of error, then it's really not enough to go on. I remember, oh, geez, I think this was the Trump, and I'm going to screw up this story 6 ways to Sunday here, but I think it was the Trump Hillary Clinton campaign, election night, where some really super famous, keyed in politician predictor guy. See, I'm using very specific verbiage here. Predicted Clinton to win, and then Trump won, and like everybody was like throwing shade at him, and he's like, well, no, I mean, like, the math and the statistics showed this, and there's a margin for error. Like, I still stand behind it. Like, yes, it was wrong, but like, that's the nature of statistics. And like, if they're doing exit polls too, like, this is something that all traders' brains ought to be able to wrap their heads around pretty well. And, I've studied trading for 30 years and recently started studying games of chance. And like, you can have, like, if they're polling 100 people who walk out of a poll, all of them could have voted for Kerry. And it just could be like a total coincidental, but statistically reasonable thing to happen, like a 2 standard deviation event. And, the next 200 could have been, 3/4 voting for Bush. So, there's a lot with statistics that you really have to understand, like, what does that statistic mean? And what does the margin for error mean? And what is, I think there's a lot there that good traders need to make their brains think that way.
Speaking of other takeaways from the election, as we're taking notes of caution from this election, we talked about this a lot last night on the special as well. So go check it out, all 3.5 hours of it, listeners. It's quite a fun time. But we talked a lot about these new binary exchanges out there and what to really read into them, what to take away from them at the end of the day. So we're talking about these ones out there, the Kalshi Forecast EX, which is a subsidiary of Interactive Brokers, so a wholly owned subsidiary. Robinhood got into this game late, and Polymarket, kind of the big one overseas out there as well. That got a lot of headlines as well. And if you're not as familiar with these, it's understandable. These are brand new markets, really. They really just got approved by the CFTC back on October 2nd. And by that, I mean a federal appeals court pretty much upheld the CFTC's appeal to a ruling that allowed Kalshi to list event derivatives. If you haven't been up on the binary space, event derivative space, it's an interesting space. Folks like Nadex were really the only game in town for U.S. binary options traders here for a long time. They were the only thing that was regulated by the CFTC and allowed to exist here in the U.S. That has changed now with this lawsuit by Kalshi. And also something to give you a note of caution on. These are brand new markets. So when I started seeing the markets on these binary venues being trotted out like polling data, it gave me some pause. Now, I'm usually a big fan of showing real money markets over any sort of other superfluous analysis, whatever it might be, a poll, whether it's some sort of market research an analyst is doing. Usually real money analysis at the end of the day is always going to be the best predictor. So I'm usually in that camp. That's why we talk about a lot of unusual activity and that kind of analysis on the network, because it has a lot more value typically than other types of analysis. But when I started seeing the markets on a Poly market or a Kalshi or whatever being marketed and shown on news outlets as having some sort of real predictive value and showing what the real market was as opposed to the polling data and other things, it kind of gave me some pause, because anyone who's been around these markets for a long time, and markets in general, should know a couple of things. And I've been watching these for a long time. I've been watching enough unusual activity for years to have a little bit of a spidey sense of this stuff. And certainly my spidey sense started tingling when I started seeing all these markets out there. I mean, obviously, they can provide some insight. Kalshi was early on some of these trends that we saw ended up playing out with Trump. But also, you have to keep in mind a couple of things. First off, this is not SPX. This is not the VIX. These are not deep, liquid markets. These are very thin, lightly traded markets. In fact, they don't even arb amongst their own markets on the same venue. I was looking last night towards the end of the night, and at one point, Harris was 26% yes, and Trump was 88% yes. So if you know anything about binaries, they should kind of reflect each other. So if Trump's 88, then Harris should be somewhere around 12, or vice versa. If she's 26, then Trump should be somewhere around 74. But they weren't even arbing within their own exchange. That's still kind of how illiquid these things are. So reading a lot into the tea leaves of binaries is potentially a fool's errand and also potentially dangerous because it is easy to manipulate these markets. In fact, we saw this. Wall Street Journal did dig in to what happened on Polymarket. They found what they termed a French whale who changed the lines demonstrably on Polymarket with $30 million. Now, $30 million to most people sounds like a lot of money, but to these campaigns that are spending literally billions of dollars for the White House, and of course, in the last couple of weeks, probably spent more than that on Facebook ads alone. If you can now go out and bid up a market and have that be trumpeted as some sort of material result by the large mainstream media, as a result, that's a worthwhile investment, especially if you think you're going to win and make money on that trade as a result. So just be very cautious. That one trader was able to demonstrably change the odds in favor of Trump. In fact, I first started noticing back on October 8th. We had the show we did with the folks from IB on our pro Q&A, and they were very excited. They piggybacked on the Kalshi lawsuit, and they were able to open their own Forecast EX. So looking at their markets back from October 8th, they had Harris at a 52% probability of winning, which reflected the nationwide polls. And Trump was at 48%. That was about in line with how they were polling at the time. It made a lot of sense. A couple of days after that, on October 10th, we saw a massive divergence on platforms like Kalshi and Polymarket, and that was obviously the result of these whales coming in and really bidding up one candidate over the other and distorting as a result. Now, it turned out to be correct in this case, so maybe you could argue, hey, they knew something ahead of time. But just be very cautious reading into this data on these venues. They're brand new, only a month old. They have nowhere near the liquidity of some of the deep regulated markets you're used to trading, and they can very easily be manipulated. So just something to bear in mind, getting aside all the arguments we heard about demographics. Polymarket, it's all international. It's young crypto, quote unquote, bros who are driving it all, so not reflective of broad demographics. Forget all that stuff. Just look at the market manipulation side and be cautious. Dan, you've had some time to digest all this binary data right now. Where do you fall on these markets and their value, or maybe lack thereof, maybe their distortive potential, sir?
Well, there's a lot to unpack here as well. One, they're new-ish. Well, they're new-ish, right? Hold on a second. I got to take some notes because I've got some good points here.
I like taking notes.
Yeah. So one thing that Russell brought up yesterday that I didn't really think about was the idea that there could be some behavioral factors at play there also, where who are the people who are trading these? Well, they're probably, like a bunch of young and middle-aged white guys. Just to think about what demographic I think is most likely to be using these services. And they're the ones who are maybe more likely to vote for Trump. Or people who are more capitalized tend to, historically anyway, vote Republican. So, there's that. And then, you kind of just brought up too something that kind of is in that same vein. If somebody just like dumps a bunch of money and really, really bids up one candidate over the other, like behaviorally, people like winners. hey, this one's got a 90% chance of winning. Yeah, that person must be good. And, there's a lot of your heart that goes into picking your candidate, but that little amygdala thing can work its way into your thought process too. Now, another thing to think about is let's compare this with sports betting. So when I was a kid, sports betting was, I love the Bears. I'll bet you the Bears win. And the line is 7. Okay, there you go. There's your bet. Now sports betting is a room full of traders, each with 6 computer monitors in front of them. And they're running this big algorithm with AI layered on top of it to pick the winners. As this market grows, I mean, that becomes inevitable. And the other side, another part of that too, especially with professional traders, including in sports betting, is arbitrage. Like you mentioned that one of the platforms, had you could arbit. And usually I love sharing with our listeners, but if I've got a really, really great trade, I'm just going to tell you the truth. I tend to keep it to myself. But it's just my bandwidth is spread too thin. I don't have the time and wherewithal to arb markets like this. But shit, man, I bet you can make a living arbing these markets until everybody else figures it out.
I have to admit, I was tempted last night. I was like, I'm kind of tired after talking for nearly 4 hours, but maybe I want to go make a Forecast EX account just to line up these markets a little bit.
Yeah. And liquidity begets liquidity too. So as arbitrageurs step in, there's just by definition more trading happening on all the platforms, and it probably becomes more accurate. I don't know. That's an opinion statement. I don't know how much I could back that up, but you would think the more trading, the more price discovery accurate it becomes. You would think.
The other takeaway I would caution, a lot of people get tied up in these types of event risk type trades where they worry about hedging their portfolio. They worry what trade they should make. How should they be on the right side of the election trade? Should you buy DJT? Should you buy SPX? What should you do out there to really trade this thing? And at the end of the day, a lot of the people who have been in these markets for a long time, there's kind of one trade that they tend to aggregate around it after and around these big event type trades. And it could be anything. It could be an election. It could be a big, earnings or OPEC number, Fed announcement, that sort of thing. At the end of the day, most people out there are kind of fading vol as a result of these types of events. Now, it doesn't always work, obviously. There are those aberrant scenarios, so you don't want to bet the house on this type of trade. But if you do that fading volatility type play, and I'll admit I did it. I had a bunch of 17 puts and VIX in my back pocket for this. And we said it even when we kind of gave you a clue when we were talking about our question of the week last week. We gave you a bunch of different choices. We said DJT. We said a bunch of other things. One of them also was, we talked before about VIX puts, in particular, going beyond. Remember, VIX settles out on a Wednesday morning, listener. So you didn't want the VIX, any sort of VIX trade that expired this morning. You really wanted something that gave you at least an extra week, if not longer, to give time for this stuff to play out, because we all expected this would go beyond today, that it wouldn't be settled by today. We thought it might go to the end of the week, might even be longer. So at the very least, give yourself some time for the VIX to play out. But the VIX downside trade in most of these scenarios tends to be the one that works out. It's fairly easy to do. You can buy VIX puts. You can buy VIX put spreads if you don't want to have the huge outlay. A lot of ways you can go about it, listeners. Buy VIX put flies if you really think you could dial things in pretty well there. But those types of trades are what the lion's share of, I won't say the smart money or the size money, but a lot of people, especially in the vol space, that's what they tend to do. You don't need to be right on direction. You don't need to know anything about the event other than that it is over. The event is over, the risk is gone, and there isn't some crazy aberrant surprise that really drives vol in one direction or the other. So in that case, that was the play, and you don't really need to get that intricate or involved or really do anything crazy. You could do the long VIX puts or VIX put spreads. If you're a little bit more exotic, maybe you want to go SVIX route, which is, of course, an inverse vol product. just bear in mind the liquidity for those not really there. I was looking at some of the SVIX markets, and they did just add weeklies recently, so that was kind of nice to see. I wanted them to add weeklies for a while, but the markets are, a nickel bid at $1.90 for some of these near at-the-money options. So spread is going to be monstrous out there. So you're probably better off, at least for now, keeping it to VIX, but it's a very straightforward. You don't have to put a ton into it to have a decent return, and you don't need to be right on direction. You just have to have the event be over and not be a crazy, aberrant event. And you also need to give yourself enough time. You can't have VIX puts that expired this morning or settled this morning. You really needed something that gives you an extra week, or preferably you leave a little more time for all this stuff to play out. Dan, what are your thoughts? At the end of the day, that is the play for most of these big event risk trades. I won't say 99.9% of the time, but let's say 90+% of the time, that's the way to go, sir.
Yeah, boy, man, I will 100% echo that. If you make a living out of fading volatility events, well, you can make a living out of it. And, to Mark's point, you won't be right all the time, but you're just historically, I can tell you, after doing this for 30 darn years, you're going to be on the right side of it most of the time, because on any given day, statistically on average, you're going to be right. There's a risk premium built into option prices, a sleeping pill. People will pay more for insurance than it's worth just to, feel better, just like buying an insurance policy. But that risk premium just goes up big time going into event risk. And, the world typically doesn't end. I can't remember the last time the world ended.
Funny how that works. So yeah, listeners, sometimes people get a little bit too clever with these options things. They get overcomplicated for their own good. It doesn't have to be that complicated at the end of the day, listeners. Certainly with these big events, it doesn't have to be complicated. Put a little bit of money into some VIX downside strategies, and usually 9 times out of 10, you will be pretty happy. As long as you keep things relatively modest from an outlay perspective, you don't bet the farm on it in case you get that 1 out of 10 outlier event, then you're probably going to be pretty happy. And you don't really need to go to elaborate lengths to figure out, what am I going to do around this election? Because the past is already there. The history is already there. The track record is already there. Make your life simple. And I think you'll be a happier camper. Let's see if our campers are happy this week, Dan. A little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, let's get to some of your thoughts. We had a lot of questions flying fast and furious this week, Dan, on a lot of different topics heading into the election, as you might imagine. Let's touch on some of those right now. Let's start talking about VIX puts. The VIX NOV 17 puts expiring on the 20th. So these are going out a couple of weeks, listeners. They traded over 100,000 times earlier this week for 85 cents. I think they traded a total of nearly 250,000 times, but one print was for 100,000 alone for 85 cents. So we said quite simply, at that price, are you a buyer or a seller? 2/3 of you almost exactly coming into the start of the show now are saying you're buyers. 33% saying sellers. If you're sellers, what are you doing? But yeah, that was kind of a screaming buy. I like that 17 strike. I was on a little earlier on those, but that was a strike I chose as well. So I kind of put that out there just to get a sense of what you folks were thinking. But hopefully you were buying those, Dan, because that gets back to what we were just saying. At the end of the day, you probably should be fading vol coming out of most of these major events because it tends to work out. And Dan, someone put on 250,000 of these things and is probably pretty happy right now, sir.
Oh my goodness, that is crazy. I bet they're really happy. I don't remember if I was posed this question, but I'm just trying in my mind to think of how I would answer it honestly. And well, I didn't buy any 17 puts, so I can't say that, oh yeah, I definitely would have. I certainly would not have sold them, but I don't know. I mean, had it all to do over again, if I would have been asked, I don't know. I still really thought that this was going to play out for a lot more time. I think I would have been a little scared buying them.
They do go out to November 20th, so that gave you some time on these. But it wasn't like they go out today or even next week. Like, I'll be transparent here. I had some puts expire next week. And going into this, I was thinking to myself, did I buy enough time? I don't know. But I liked the price. They were less than half the price of these, so it was a nice outlay. Turned out, spoiler alert, pretty good. But I was kind of wondering, should I get some more a little bit farther out just in case? But again, if you keep things manageable position-wise, it's not a big deal. You can add more if you want. But yeah, these were interesting, and our audience liked them. Speaking of liking things, Dan, we asked our audience yesterday, not who did they want to win, but who did they think was going to win the election. And early on, overwhelmingly, they were over 2/3 thought Trump was going to pull it out, which is way ahead of when the national numbers started swinging that way. So maybe our audience was onto a tip early on. They ended up being 74.3%. We only did this poll for a couple hours during the show, and it got quite a few votes. So people were piling into this thing. 74.3% said Trump was going to take it. They turned out to be right. Only 21.8% said Harris. 4% going my route, Dan. None of the above. I wanted to do the Brewster's million vote this year. None of the above. But yeah, our audience was early on that one. So kind of interesting there. And then Dan, on the crypto side, it's been another big narrative coming out of this election, which is which camp is pro-crypto, which camp maybe was anti-crypto, how much money did crypto funnel into the election? Spoiler alert, it was a lot. We said, are you feeling bullish or bearish in Bitcoin, aka crypto, ahead of the big election? This was on Monday. And we said we saw a similar trade go up. We saw the DEES 1575, 1315 put spread in BITO go up 100,000 times on Monday for 63 cents. We said, are you a buyer of that, so you're bearish in Bitcoin over the next month and change? Are you a seller, so you're bullish? Or you just wake me up when it's all over? And our audience, they wanted to wake up when it was over, Dan. At least right now they do. Nearly 41% going that way. A third, exactly, 33.3% want to buy that spread. That's kind of interesting because buying puts in the past in BITO hasn't worked out too well. And that 25.9% want to sell it. Dan, do you have any thoughts on that? Are you a buyer or a seller of the 1575, 1315 DEES put spread in BITO, sir?
Oh, geez. I don't know. You know, I'm not following crypto all that closely. I mean, with BITO sitting here at 2041, well, I mean, geez, just based on, yeah, I mean, I would be a seller of that put spread for sure. You know, at current market prices. I mean, wait, can you get enough for that? Hold on a second.
You're not going to get 63 cents now, that's for sure.
Yeah. Yeah, I mean, after it's said and done with, I mean, crypto is one of those things that benefit from the Trump victory. So, yeah, I mean, I'd be selling put spreads all day in BITO if I can get them at the right price.
Yeah, in the past, that's been a pretty good do. You don't get a lot of juice for the puts in BITO as opposed to, let's say, the S&P or an equity, because obviously the premium is to the calls in BITO, not in the puts. But interesting stuff as well. One other question we asked you last week. Let's just pay it off now. We asked, where do you think VIX is going to close going into the end of the week, the final trading session before the big weekend heading into the election? And 35.8% of you chose 18 to 21. VIX actually closed at 22.05 last Friday, so the correct answer was the higher category of 21 to 24, which 22.6% of you chose. 26.4% of you thought it was going to be north of 24, and 15.1% chose below 18. You folks were ultimately right, you're just wrong on the day. They had to go to today to get below 18. All right, listeners, that music means we have come to the end. Man, we went a ways. Just talking about election fun, Dan. Any other election fun you want to leave the folks with in terms of takeaways? And then B, if folks want to talk about any of this stuff, fading events using vol products or binaries or anything else, where should they go? What should they do?
Yeah, you know, I filled in for John, our head coach, in group coaching yesterday, and I talked about which industries and which stocks were likely to benefit from each candidate's successful candidacy. And it played out pretty well, just as predicted, I guess. But the takeaway is that they're probably likely to keep going that way over the next, probably couple of months. So there's some pretty good opportunities for those of you who are in our group coaching class, or if you join, you can just listen to the archive. But hit us up over at markettaker.com.
Don't forget the second T for Theta, listeners. Market Taker. Easy for me to say. Market Taker. I don't know, Dan, have you thought about markettheta.com? Not a bad URL either.
Right.
Markettheta.com, the place. I don't know who owns that, but don't go there. Go to markettaker.com instead. Markettheta.com, not safe for work is what I hear from around the water cooler out there. And while you're checking things out online, listeners, only one place to go to show your support of the show, public.com/options bootcamp. All one word, that URL. It's all you got to do. Just go to that URL and they'll know you're coming from this show. It helps to support the show that has been coming to you for well over a decade now, listeners. It helps keep that flow coming. Public.com/options bootcamp. Thank them for supporting the show. Kick the tires on their platform. Hey, maybe you get paid to trade some options. Certainly not the worst thing out there. And then from there, if you like what they have to offer, you can always keep using more. If you want them to add more features and more tools, you can request them. And guess what? They're really open to listening to our audience here. They want to hear from you. That's why they're on this show. They want to hear from you folks. So let them know. Go to that website, public.com/options bootcamp, and give them your feedback. Chances are they will listen and implement it because they want to hear from you folks, the options traders out there. That's going to do it for us on OBC this week, but you don't worry. If you need more Dans in your life, I'll be back in about 15 minutes. So all of our pro listeners hanging out in the live, you can hear it instantaneously with the other Dan the man Graham's out there to hold court on all things futures on the Futures Rundown. Should be a good time. Then back again tomorrow, doubleheader. I will be beaming in from the SIBO tomorrow with the Flow Master. Maybe we'll get his thoughts on some post-election madness. Should be a fun time out there, as well as all other things lighting it up. And of course, this week in Futures Options Friday, going to be a banger week for vol views. A lot of vol to talk about, mostly to the downside right now. So interesting stuff out there. We'll get to more of that fun in a little bit. Then we're back again next week, all the way through to another Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
If you trade options, you've got to ask yourself, why would you choose an options trading platform that puts investors first? At public.com, there are no commissions or per contract fees. And more importantly, it's the only platform where you can earn a rebate on every single contract traded. That means you can save on your options trading costs and keep more of your capital in play. Whenever you trade options on Public, your savings are automatically applied. So, don't change your strategy, change your platform, and see the difference in your bottom line. No commissions, no per contract fees. And it's the only options trading platform where you can earn a rebate on every contract traded. To learn more, please visit public.com/options bootcamp. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.